It's not a secret anymore. I bought Kering stock. Now, Kering is most known as the parent company of Gucci, but they own many more brands such as Yves Saint Laurant, Bottega Veneta, Balenciaga, Alexander McQueen, and also Brioni. And this is just the clothing part. But as beautiful as those companies or those brands might be, the stock is down almost 70% since the middle of 2021. So the stock is doing a bit less beautiful. But with the help of data, their own financial report, and some company or market research, I will try to explain why I think this company presents a unique opportunity and how I plan to approach this investment. Now, if you like the insights I'm about to give you and you learn something new after this video, make sure to subscribe to my channel as I try to post 3 videos a week with, well, unique insights and my own objective opinion. Now, with that being said, let's start this video. Now, I already explained, of course, that I bought Kering, the parent company of Gucci. However, let's take a look first at the numbers through Koifin, because we have some very basic stuff that we have to get through. Because, well, if we look at the 5-year chart of this company, it just doesn't look all that spectacular. Especially on a 3-year basis, it has simply been dead. So this doesn't look really attractive at this moment. It becomes even worse when we look at the PE ratio, because we have a trailing 12-month PE of 14, but a next 12-month of 16.4. So this means they expect earnings to go down. And that's also true when we look at the EPS numbers. We see a 13.19 euro EPS estimate for this year, while next year it is expected to grow at 18% and the year thereafter at 19%. Okay, so that looks kind of promising here, right? But then when we look at the sales numbers, we can see a 9% decline, with a 4% rebound next year and a 6% rebound the year thereafter. So that raises some questions, right? Because how does EPS grow that much faster than revenue? Kinda don't make sense, but it does when I get to it later. Now, there are some other things that, well, should stand out when we go through these numbers. First is the total debt, 19.3 million, and it has been exploding. So what has happened is that Kering has been doing a lot of strategic investments. They have been buying properties for their stores. They have been buying stakes in competitors. They bought a 30% stake in Valentino for one. They bought a company for their fragrance section. So they have been doing a lot of acquisitions over the past, 4 years basically. So they have been going through an entire investment cycle. However, when we look at cash, they have 3.34 billion euros worth of cash. So their cash is kind of okay. Now, those are the basics, and I will go into the future estimates later in this video, but those are the basics. They are a bit mixed, right? Okay, so then just let's look at the market and the company within the market, right? Because here we have the value of the personal luxury goods market worldwide from 1996 to 2023. So this was last year. It's the latest data we have, right? So this is the best we can work with. But we can see the steady increase, the dip through COVID, and then the steady increase once again. Now from 2022 to 2023, we kind of got the flattening here. And that's basically due to all the constraints we have of the economy. We have China being on a recession, probably. We have the US maybe heading towards a recession, but at least spending being quite tight. Europe has been seeing massive inflation in a lot of the most developed countries, the most developed economies, even worse than the US. I mean, here in the Netherlands, we have seen 14% at some point. So, I mean, we have seen some issues here as well. Now, this is all the markets that present a lot of the revenue for Kering. However, when we look at the revenue of the luxury good market worldwide in 2023 by segment, again in dollars, we can see that the luxury fashion is the largest segment, followed by luxury leather goods, followed by luxury watches and jewelry, then prestige cosmetics and fragrances, and then at the bottom, luxury eyewear. Now, about 45% of the revenues from Kering come from Gucci. And Gucci is, of course, known for their leather goods. Also their luxury fashion, but mostly their luxury goods, right? Now, they do start to do a lot with their eyewear, also their fragrances, but this is not what Gucci does traditionally. Now, if we look at the revenue of the luxury goods market worldwide in 2024 to 2028 by country, now these are, of course, projections. But what we can see is in blue, the United States is steadily climbing upwards, bit by bit. Not too fast, but it's climbing. Then we have in the darker blue shade, we have China. And this is mostly where the future growth will come from for this segment. Because, well, I wanted to do the entire series on the luxury goods market, right? So I've been doing my research for that as well. And what we know is that the future growth of the luxury goods markets is going to come from China, from the millennials in China specifically. There are about 400 million millennials in China, and they are expected to drive growth for this segment. Now, that's also kind of where we see the opportunity arise here, or the threat, depends on how you see it. That growth is going to come from China. Now, China is having a difficult time right now. But they had their stimulus package going, right? And I will get back to this later as well. But we see China with a lot of future growth. Now we see in gray, we see Japan. They're kind of expecting to grow the business over there as well, but the numbers are just way lower. Same goes for France and even more so for Germany. So then we have the luxury goods sales of the leading luxury goods companies worldwide in 2022. Now, in first place, we see the giant LVMH, right? That's not going to change. They are the biggest player here. Then we had Kering in 2022 as the number 2. And in number 3, we had Richemont. Now, those two have swapped, but that's mainly due to the differences in what they sell. You see, Richemont is, for example, Cartier. It's a lot of watches. It's a lot of jewelry. And those segments kind of held up somewhat better. Kering is a lot of leather goods. And those have been hit somewhat harder. So I believe in 2023 from the Richemont was at 20.6 billion, while Kering was at 19.6 billion for 2023. So they swap places, but I think Kering will overtake them in the future. Now, the revenue share of Kering Group worldwide in 2023 by region, we can see Asia Pacific, excluding Japan, at 35%. Now, this is mostly China. We see Western Europe at 28%, North America at 23%, Japan at 7%, and the rest of the world at 7%. Now, this has kind of been switching in the first half of 2024. Now, if we look at the revenue income for Kering for the first half of 2024, we can see that the revenues came out to 9 billion. It's down 11% year over year. We see EBITDA down 28% and recurring operating income down 42%. Now, at first I was thinking, what is recurring revenue or recurring operating income for basically Gucci, for those luxury houses? And in all honesty, I believe it's not. It's a bit of a strange definition. How they use it, but it came down to something like things that they have really one time or that are comparable. So kind of strange terminology there. But then again, luxury houses, right? So the net income attributable to the group was 878 million compared to 1.7 billion last year. Now, this is an incredible drop. We had the gross operating investments at 1.4 billion, down 26% from last year when it was 1.89 billion. And we had free cash flow from operations at 1 billion compared to 823 million last year. So that was actually up 28%. So at least something is looking good, right? Now, the net debt is at 9.9 billion compared to 3.8 billion last year. And that is kind of where we see the huge investments. So we can also see it at the number one between brackets, the acquisition of property, plant and equipment and intangible assets, including the acquisition and disposal of real estate assets in the first half of 2024 for 897 million and the first half of 2023 for 1.3 billion. So yeah, here we have it already. They bought a bunch of real estate. They bought a bunch of prime real estate. So if we then look at the revenue breakdown, we can see that of those 9 billion, 4 billion came from Gucci, 1.4 billion came from Yves Saint Laurent, 800 million from Bottega Veneta, 1.7 billion from the other houses. So this is the Brioni house, but also some other things which they have in cutlery, for example, cups, plates, all those kind of things. And I mean, really expensive, those kind of things. And then they had the Kering eyewear and corporate section for 1 billion. Now, of course, a luxury house wouldn't be a luxury house without eliminations, and they did this for 128 million. So overall revenue 9 billion, down 11% from last year. But we can see that breakdown by region. We see Western Europe still at 28%. We see North America at 23%. We see now rest of the world at 9% instead of 7%. Japan at 8% and Asia Pacific, again, mostly China, at 32%. But here we have that argument for these stores once again. The number of directly operated stores by region, so the lower part of this page. Western Europe, they increased it by 11. North America, they increased it by 10. In Japan, they decreased by 6. In Asia Pacific, excluding Japan, increased it by 8. And rest of the world, they upped it by 7. So in total, they had 30 net new stores. Now, they also closed, I believe, 2 outlets because they didn't want to be that associated with discounting. So they closed the outlets. They want to push up market, they want to push up price, and the outlets just aren't part of that strategy. So they are being very careful with discounting and with those type of stores. Now, the investments are a big part here in this story. And we can see that broken down even further because we have 124 million of investment for Gucci, 107 for Yves Saint Laurent, 51 for Bottega Veneta, 99 for the other houses, and then the $1 billion for Kering eyewear and corporate. Total 1.4 billion again. But the line item below it, or the lines below it, are kind of telling because they say operating investments amounted to 1.391 billion in the first half of 2024. Excluding the acquisition of strategic real estate assets in New York, they totaled 494 million, representing 5.5% of revenue. Now, 5.5% of revenue in investments, I think that's a very, very healthy margin. That ratio is in line with that seen in the first half of 2023, where it was 5.2%, sorry. Now, the Kering eyewear and corporate is where they are investing heavily because this is something they brought in-house. They want to go into the fragrances market more so because they have these brands. They have Yves Saint Laurent, they have Gucci. Those brands are really good for those fragrances. Alexander McQueen maybe even as well. So they want to expand into those parts. Now they bought a company, Creed, is it, in order to expand that and to facilitate that. So it's of course where a lot of that cash is going. Now that also kind of means that we have to look at the balance sheet, right? I mean, this is just part of it. It's not the most fun part. It's not the most fun part to explain, but it is an important part of it. So starting with the goodwill, this has come down slightly, not too important. Brands and other intangible assets flat. Lease has gone up slightly. Well, I mean, they have more stores now. And the first real increase comes through the property, plant and equipment. That's that $1 billion increase right there. Now, the investment in equity accounted companies, 1.7 billion, mostly the same as last year. And there is nothing all too spectacular there to say. The inventories are about flat. The trade receivables are about flat. I mean, it's all kind of the same, right? Now, then when we get to the liability side, what stands out is the equity attributable to the group. That's down 300 million. We have the non-current borrowings, so the non-current debt, that's $1 billion up. And we have the current borrowings, so the current debt up about 400 million. Now, that are the large changes here. So all in all, that's not that shocking. Now, if we look here, we have the estimates, and what they are expecting is for the coming quarter to be sales for 4.4 billion. In Q4, they are expected to come in at 5.2 billion, and then we see some growth again. Now, in terms of price targets by analysts, we see a high price target of 575 euros. Now, that's way too high in my opinion. And we have an average of 992. Now we see this steadily coming down, right? We see this white line going down. Well, that's also because we have the low number of $208 or euros, sorry. That's also coming down. So that's dragging the average along with it. Now, in my opinion, 575 is way too high, like I said. But 280 is also quite low. So let's quickly talk about how I plan to manage this position, how I plan to manage this investment. Because we can see right now that Kering is my fourth largest position. It has a weighing of about 10% right now. And I plan to add more to it. Now, there are some things that have to play out quite well in order for me to stay confident in this position. In order to keep adding to it, because that's also what I want to do, because it is already somewhat part of the core positions, but I still want to add more to it. Now, what needs to play out first is that we see a continual positive sentiment coming from China. I want positive news. I want the consumer there improving. I want the stimulus signal that has been given to progress, to show up in the numbers for other companies, but also for Kering. Now, why do I say this? Well, in general, we say that the signal that when the Fed flips in the US in a recessionary or a market stress time, that marks the bottom. Now, this is exactly, and I mean exactly what has been happening in China. They have been giving massive stimulus, which in all honesty just sound like a bottom signal to me. The discussion is whether it's enough, and that I don't know. But somewhere it went from the signal that matters to the action that matters. And in my opinion, that's wrong. I think the signal is still what matters. Now, if that signal is correct, and we have seen the bottom, or it's not gonna break new bottoms, new lows, then I will continue to add to this company. And I don't mind making it a slightly larger holding right now. Because I think that if China is actually improving, then the expectations for this business will go up quite a bit as well. Now, if that's the case, then I really want to hold on to this company for a longer time frame, for the next 5 years at least. And I mean, that's kind of the same with PayPal, right? I can make it a 10% weighting now, but then it will just be overtaken by the size of the overall portfolio. I'd rather have it slightly larger now and then to grow it into the company or to shrink into the portfolio overall. So that's what I'm planning to do here. So the first signal that I will be receiving for this is on October 23rd when they will be releasing their Q3 numbers. Now they have every 6 months they do their conference call, but we can check and we can see what they do, see if they change the outlook somewhat, and we will have the first insights there. Now we can also listen to the commentary from other companies, right? Earnings season is coming up. So we can listen to what other companies say, what they think, and how their outlooks for China are evolving. Because maybe they will give us some insights into trends, how it's changed over the last month. They don't all do that, but some might. So that's what I'll be looking for. Now, once again, if this doesn't happen and we will see a continuous sell-off, then I'll be a bit worried. And I will stop adding to this position. watch, observe, and readjust basically. Kering, I see it as a stable company in my portfolio, although the numbers might not look like it right now. I mean, those luxury goods brands, they have huge moats. There is no second Gucci, just like there is no second Louis Vuitton. And although the brands of Louis Vuitton and Hermes might be stronger than Gucci's in my opinion, I just like Gucci a lot or Kering a lot because of the troubles this company is perceived to have been going through. While I think they have just been positioning for the future. So let me know what you think about this buy, if you agree with what I'm saying, or absolutely not, and just think it's a dumb purchase, then please let me know. I'm happy to argue about it. And that was this for this video, and I hope to see you in my next